Good morning, everybody, and welcome to another edition of Bleeding Crypto's market update. This is going to be an update on Bitcoin, the most talked about subject on crypto Twitter. Where is it going? Is it going up? Is it going down? Have we hit all time high? Have we hit all time low? Well, I'm going to give you my opinion and my view of what I see in the market, and then you guys can make your own decisions from there. Everybody needs to make sure they have a realistic view and expectation of the market and always understand that the market is never going to play out the way you think. It's going to do the opposite of what the crowd does, and this is how they make their money. No different than a casino. The market is not here to make you money. They're here to make money. The exchanges are here to make money. When you understand that and accept that, you'll be better off because you won't be risking as much, knowing that you have a very good chance of losing it all, just like you do in a casino. I post from time to time these liquidation charts on my feed. Just the other day, $500 million liquidated in 24 hours, just to give you an idea. And even in this market where there's not a lot of volume, that's because everyone thinks they're smarter than the market, and they think they're going to make up the losses from them holding all the way to the top because the Moon Boys told them we were going to go to $100,000. And here we are at 29,931, and now they're 50xing, 100xing leverage to see if they can make up that money, and they're only giving it away even faster. So I'm going to give you my view and my opinion of what I see happening. Before I do that, what I want to do is I want to zoom out to the weekly. I want to get a really good zoom out view of the market, and also understand that when I come up with a target, when I come up with a price that I think Bitcoin's going to go, it's not because I have any certain insider knowledge or a crystal ball or anything like that. It's strictly the fact that I like to look to the left. I believe that all the answers that we need, or the majority of the answers that we need, are already found in the chart. You have to understand that these market structures, this price action, they all speak a language and they all follow a language, which is why you see a lot of guys that are in TA. A lot of people don't believe in TA, and that's okay. Well, you know what? Technical analysis tends to play out more often than not. There are certain patterns that we find within an asset class, within the markets, that they tend to respect certain levels. They tend to respect, which is why we use them. Everybody views the market differently. We all use different tools. There are hundreds of tools out there. The most accurate tools are usually the ones you see the most. The Fibonacci tool is, I think, the most popular, well-known. And why do we use it? Because it respects certain levels within that Fibonacci tool that helps us to discern the market and help us to make money. Is it 100% proof? Absolutely not. I don't think there's any tool that is 100% proof that I have found, or anybody has found in these markets or in TradingView as a tool. Some people use the Bollinger Band. Some people use Elliott Wave. I use a very simple system: EMAs, which help with support and resistance, Fibonacci, and I also look at the MACD for to help me identify the momentum. How is the momentum bearish? Is it starting to flatten out? Is it starting to come back? Sometimes a market structure may look bearish, but the MACD may be curving up and giving us a signal that the momentum is changing, but it hasn't yet reflected on that market structure. So all that and years of experience is going to help me understand a range. And that's the key word here, guys: range. Everyone wants to be smarter than the market and wants an exact number for the bottom, and that is ridiculous. You don't play no experienced trader is going to know. No one is going to know. Any experienced or non-experienced is going to know where that bottom is, but you have a range of where you think it's going to be, and you have a range where you feel comfortable buying in. Everyone loved Bitcoin at 63,000. Everyone loved it at 69,000. And it's hilarious to see the reluctance to buy it at 29,000. If you don't believe Bitcoin's going to come back up here, then I would suggest you close your chart, pack your bags, and leave crypto. I am going to be talking to you under the assumption that you are like myself, that believe Bitcoin is going to go to $100,000 and higher. I truly believe that. So the fact that I truly believe that is going to help me purchase within a certain range as we are dropping, in anticipation that in the next couple of years we're going to meet that target. Now, to find a range, I think it's something that is not as hard as people think it is. And there are certain metrics that I have found that have played out in the past. The main one is that Bitcoin, I'm sure most of you guys have heard, likes to retrace around 80%. That's been the historical move in the past 5 big moves that Bitcoin has made. It's retraced 80%. There's also an EMA there's a couple of EMAs that have helped hold the support of Bitcoin. Now, Bitcoin has not been around as long. So the 2 EMAs that we're going to look at, the 300 and the 200, especially the 300, is not going to have a lot of data because, again, it's a fairly new asset class and it takes time to really build that 300 EMA to give us a long stream of data. But I'm going to show you anyhow of what I'm thinking of. Now, I'm not going to measure every single move that Bitcoin has made. You can do that on your own, but when you put the swing high to the swing low, the top to the bottom, and you measure out the Fibonacci, you will notice that it's going to be right there within that 80% range, give or take a few percent, but it's been pretty consistent inside of that 80% range. Now, if you take that into consideration and you look at this entire move that we've had, here is the bottom. This is the black swan event that we've had. We've had this black swan in 2020, and if you have noticed, this blue line. As a matter of fact, let me do this. Let me just hide these other EMAs for now. We don't need them. I'm going to hide that one. I'm going to just leave the 300 EMA. The 300 EMA caught the black swan event right here in 2020, and this was basically the bottom. The bottom for Bitcoin, depending on what exchange you look, give or take a few bucks, was $4,000. Some say $3,980, but you get the point. $4,000 is the bottom here on Bitfinex. Now here in 2018, it got close to it, but it didn't quite hit the 300. But that's fairly close. Now, I don't use the simple moving averages. I use the exponential moving averages, the EMAs. But I saw someone's chart a couple of weeks ago, a few people actually, that they were looking at the 200 simple moving average. And you know what, guys? I like it. I'm not in competition with anyone, guys. I'm here to learn, just like you are. And if I see a tool, a setting that works for others, and I incorporate it into my arsenal, and I back test it, and I use it, and it works, great. That's awesome. You should all have an open mind and have that same approach, that you don't need to feel like you can't give credit where credit is due, and you have to act like this is you invented this tool. If you invented the tool and it works, great. I know of a guy who invented a tool, Nebraska Gooner, and his tool is great, and props to him. But this setting here, obviously, I did not invent it, but I'm going to use it because I like the way it works. I'm going to put it in white. Okay, now the 200 simple moving average, guys, compared to the 300 moving average, I think it's more accurate. Here, back at the black swan, yes, it did break through it, but if you notice the candle bodies, they held closer. Look, the candle bodies held closer to the 200 simple moving average. Here in 2018, it literally caught it absolutely perfect. So between these two EMAs, I like this one to show the historical bottom of the cycle. Doesn't mean that I don't use the 300. I happen to like the 300, and I've been using it for a few months now since Trading Room app turned me onto it, and it's been working out in all time frames. It's been a very accurate tool for me. Now let me do this here. As you can see, this ends here, or it begins here, better said, in 2017, and there's not much data here, again, because like I mentioned before, this is a new asset class, so we're going to be limited on data. But if you're going to compare these two as far as a bottom, hey, you know what? I'm going to say the 200 EMA, the 200 MA, excuse me, the 200 simple moving average, SMA or MA, however you want to pronounce it, has been a very good indicator. But here's the thing, guys. This has only touched it 2 times, and it's been accurate both times. That isn't an overwhelming amount of data to have and to base your money on. Not in my opinion. I think you need to, kind of like when we do support and resistance, we need 3 or more data points to that's what I use anyhow. I use 3 or more data points to confirm a support line or a resistance line to give me as much confirmation. And if I can find more than 3, even better. The more confirmations, the stronger it is. The more established the pattern is, the better off it's going to be. And for those who backtest that, you will notice that will resonate with you guys. So moving forward, where are we going? Where does that leave us in the current market conditions? Current market conditions, now please listen to this. Crypto Twitter has very selective hearing, and I'm sure most of you guys, well, not most of you guys, a lot of you guys, especially experienced traders, can understand this. I will say, for instance, if this holds, we will stop at 22,219. And yet, what inexperienced, immature Crypto Twitter listeners will say, BC called the bottom at 22,219. He says that is the bottom. And they will marry that number, even though I said if. Maybe it's a language barrier. Maybe they don't understand in their country. They don't have an equivalent to if. So let's say maybe, or I don't know any other really good good words to use. But for those who are intelligent enough to understand what the word if means, this is one possibility. Now, the 300 EMA is not that far off from there. It's at 21,345. So that's a pretty tight range there. So far, our bottom for this cycle, for this year, has been $26,591. I have seen some posts that a few people said the bottom is between 25 and 27,000. That's what they're calling. Hey, you know what? They could be right. If they're right, great. Awesome. You got it figured out. That's incredible. Good for you. I don't have it figured out. So I'm going to use the technical analysis that I've been using for the past 6 years that has made me money to help discern where am I going to find a range for the next bottom. Where do I feel comfortable buying? And what is the best and worst case scenario? What is a typical scenario? So let me give you an example of another metric that I want to use to measure this entire move. I'm going to use the Fibonacci. The top of the market was right here at 68,958 on Bitfinex, and $4,000 was the bottom. So let me do this, just so we can be 958. Hold on, give me 1 second. Actually, I don't. Did I put 68,958? Yeah, okay, 68,958. 68,958, and 4,000 is the bottom. All right, perfect. I know it doesn't matter much, but I just want to have the exact numbers. So, all right. So as of now, where have we fallen? Where have we found support? Guess what, guys? We have found support on the golden ratio. Now check this out. Look at this. Even though we hadn't established a bottom yet, look at how strong this support. Look how strong this support has been across this big move that we have. Now keep in mind that this top was not established yet. We knew what the bottom was, but we didn't know what the exact top was yet of the market. We obviously already know that this was the top. Everyone thought this was the top, but it turned out that $69,000 was the top. And yet, during this move here, look how perfect it lines up with 618. That's the beauty of TA. It's the accuracy is just overwhelming if you utilize it and you know how to utilize it correctly. Now, 618 is also known as the golden ratio. Why is it called the golden ratio? Because it is 618 is actually a number that's found a lot in everywhere in in space, in the world, in nature. If you happen to have some time, Google golden ratio and read up on it. It's a very, very interesting read to show you even the cosmos have a pattern that match up, that line up with the Fibonacci 0.618. It's even in our DNA. It's incredible, the read on behind the golden ratio. And it works in the markets as well. However, for cycle bottoms, history has shown us that the cycle bottoms are right around 80 to 85%. Where does that leave us? That leaves us inside of this area here, 80 to 85%. So between $11,405 and $17,901. That is the typical correction for the past 5 moves. Now people are saying, well, BC, this market is different. Guess what? They say that every single time. There's always an excuse why this market is different. But here's the thing. This is your money. No one is forcing you to click anything. You are clicking your own entries. Unless somebody's holding your hand and making you buy or making you sell, you're responsible for when you put your own orders in. So if you believe that this market is different and we are not going to respect the levels that we've always respected so far for this asset class in the past 5 big moves that Bitcoin has, then you have your answer. This is the bottom, and now is when you should start buying. But here's the problem that most people make. When they buy here, they will sell here, or they will sell here. I can't help you with that. Unfortunately, that's the pattern that most people follow. If you bought here, if I bought here, and it came down to here, I have a different mentality. I'm not going to be sad about this buy because I know that if I buy here, this buy here is going to lower depending on how much I buy here. Even if I just do a little bit, it'll still drop it a little bit. But the more you buy here, you dollar cost average, and that entry is going to go lower. But my point is that I wouldn't sell what I bought here, because remember in the beginning of the video I said that I believe that Bitcoin is going to 100,000, and if you believe that it's going to 100,000, anywhere you buy that is not here, you should excite you. You're buying it here today. You're buying it at 61%. How many times have you gone to the store to buy a favorite piece of clothing, whether it be a blouse or a sneaker or whatever it may be, and you walk in and they said, hey, we have a 60% off sale today. Are you going to be upset? You're going to be taking advantage. And guess what? If you come back the following week and they say, hey, we're now having an 80% sale, are you going to be upset? You're not even going to worry about the 60% that you bought at 60% last week, and you're going to buy more even if you don't need it. But yet, here, the psychology is complete opposite. The more it drops, the more upset people get. Rather than having rather than being excited, the fact that they're able to buy it even cheaper. So, bottom, couple of places that I'm looking at. One of them could be the historical 200 MA that has caught the price action twice since it's been around. The 300 EMA has caught it once, Black Swan, and close to it. So they're very, very similar. And then again, guys, between these numbers here. Now, that being said, does that mean that Bitcoin cannot go below, say, 886? Does that mean that absolutely guaranteed it cannot go below? Of course not. We don't know that. But you know what I do know? That if this were to drop below this, the more I buy, the lower all of my entries that I scale in will become. Like that. They will all come down. So having that mentality, it's going to help you cope with the fact that, you know what, if we do come down here, you were wrong. This wasn't the bottom. Crypto Twitter didn't know what they were talking about, and it turned out that the bottom was much further, and that's okay. We're looking at $100,000 target. If you buy it at 30,000, guess what? When we hit 100,000, you're gonna have a very nice ROI. You're gonna have a hell of an ROI when you buy, if you get the chance to buy it down here. Again, guys, the point is, we don't know where the bottom is, but we do know that we can buy it within a range. You can buy today if you feel like it, and you can buy it when it hits, if and when it hits the 200 MA, if and when it hits the 300 EMA, if and when it hits the 786, and if you get lucky to hit 886 at 11,405, even better. So I hope these levels, guys, will help you at least have a realistic expectation of where some good levels may be for Bitcoin and for where you would want to start scaling in into some of these positions. Let's see, what else? I guess that's pretty much it. Let me look at the MACD right now for momentum on this weekly. You know, you can see here, it's just lower highs on the MACD here. You know, obviously it's not looking good. We don't have any type of curvature, any type of these moves here showing that there's going to be a move in the volume, in the momentum just yet. Eventually they will show up, but on the weekly time frame, typically we'll see a move like this when we've already done a substantial amount of here. Actually, let me do this. Let me get the RSI out of here. Let me get the OBV out of here, and look at when we curved right in here. When we curved right in here, that was this push, this really high push of volume that came in, and that's when we started to turn. So if this is a signal that you want to wait for a confirmation, yeah, go ahead. There is no wrong time to buy below $69,000 if your target is $100,000. Even if you buy it at $69,000 and it hits $100,000, you're going to make profit. The question is, how much profit are you going to make? Could you have made more profit if you bought at $30,000? Yes. Could you make even more profit if you buy at $22,000? Absolutely. And could you make profit if you hit $11,405? That is a no-brainer. Almost a 10x, probably end up being like a 9x from this point here. Many people argue that we won't go below the cycle top of 2017. Okay. All right. You know what? The 2000, here's a cycle top. 2000, that puts it right here at 19,876. The 300 and 200 200 MA and the 300 EMA are slightly above it. Yeah, that seems like a reasonable area. And if that's what you believe, then guess what? Buy it. Why are you contemplating? Why are you having such a hard time deciding where the bottom is? There it is. Look, from here down here, get this range here and consider this a stink bid. Consider this a blessing. You buy within this range if this is where you feel like this is the absolute bottom. And if it goes here and you have some stink bids here, you do two things. You get a great entry, an amazing entry compared to here, and you automatically dollar cost average your way down. So there are different ways to approach the market, guys. At the end of the day, it's your money. Don't listen to anyone other than what you feel you need to do. Nobody here can tell you, and nobody here is holding your hand to click any buttons or make you buy. We're only here to give you our opinions, and I'm here to give you my opinion of what I'm looking at and where I plan to buy, where I want to scale in, where I think is good value. I think it's a great value right now, considering that I'm looking at $100,000 for the target. And if it drops lower, the value gets even greater. But the difference is I have a plan, so that when the market goes down, I don't get fearful. I get excited. When you don't have a plan, what happens when the market goes down? Look at crypto Twitter. Do they look excited? They look fearful because they're trying to guess where that bottom is. They bought based off of what crypto Twitter told them, which is up here, and they keep on writing it all the way down, and they're going to get to a point where they're just going to abandon and leave it all together. So just be careful that you don't fall for that. Now here's another pattern, guys, that I just want you to keep in mind. Again, as a technical analysis, we look for patterns in the market that help us to determine where some ranges of purchases can be made. Both of these runs. This ran to 20,000. This is called 20,000. Rounded off. This ran from 3,200 to 14,000. This was a bull run. Make no mistake about it. This was a bull run. It wasn't as hyped up as this one here, but you can say from 32 to 14,000, that isn't a bull run. And yet both of these times we capitulated 50% when we thought this is it, we're turning back around. 50% after finding a range. So this one ranged for I think like 4 or 5 months, and then it dropped 50%, and then it ranged some more. This one ranged here in this area here for a few months, started to go up, a little fake out, and then we had the black swan event, and we capitulated a little bit more than 50%. So if history repeats itself, and I said again that word if, where a lot of these crypto Twitter people, I don't know what country they are, they don't understand what if means. So if you don't know what if means, please call a buddy of yours and see if he knows what the word if means. And if it follows, we could expect that at some point, I don't know when, at some point, we're going to go sideways for a while. And it's going to seem like an eternity. And it's going to make you think that we hit the bottom. In 2017, when we were in this range, in the $6,000 range, everyone thought this is it. This is the bottom. 95% of crypto Twitter was convinced that 6,000 was the bottom. For those who were around in that era, they can vouch for me, and they'll tell you, yeah, we all thought 6,000 was the bottom, and then the bottom fell out again, another 50%. Well, I'm looking for that because it's happened before. So I want to be prepared. I want to have a plan so that if I see this ranging, wherever it may be, wherever she may be, and it's starting to go sideways, and then I can say, you know what? In the past 6 years, there have been 2 bull runs, And in those two bull runs, we dropped 50%. So if that happens, guess what? I'm going to have a plan. So I'm going to measure 50% from wherever we start to range and have what I call a stink bid. A stink bid is one of those in case moments. If you're going to have USDT or USD or BUSD, whatever stable coin you like to have in your wallet, what I like to do is I like to keep some stink bids that may seem ridiculous. Because sometimes in crypto, you'll see these random wicks. They call them scam wicks to liquidate people. But at the same time, they can pick up your order. And those are what I call stink bids. So I want to have a stink bid at about 40% below the range. Now, again, I'm not trying to play the exact number. If they have both falling 50% or more, I want to secure it, and I'm going to go 40% for shits and giggles. If it goes down further, great, awesome. But I got a random 40% discount. I woke up, 40% discount. That's amazing. I'm not going to be fearful. I'm not going to be upset about it. So whenever we start ranging, guys, and you start hearing crypto Twitter telling you this is the bottom, be careful. Put a post-it note on your computer, put it on the side, and just write yourself a little reminder. When CT starts to call the bottom, and we've been in a range for a while, put in capital letters, beware. That's it. It doesn't mean that it's going to happen. It means that it's happened in the past, and there's a possibility that it's going to happen again in the future. And if it doesn't, great. You're good because you bought on the way down, so you're good. Crypto Twitter figured it out, and that was the bottom. That's awesome. I don't want anybody to lose money. If you guys can figure it out, there's people much smarter than I am out there analyzing the markets. If they get it right, great. Congratulations, dude. Because whatever you called, guess what I'm going to do? I'm going to study what you called, how you called it, why you called it, and then I'm going to implement it when I do my strategy. Because I get to learn from somebody who was smarter than me, who used a better view of the market to make money. He outsmarted me. Great. That's okay. I'm here to try to learn and take away from as much people as possible, whatever bits of knowledge they can give me to help me make more money, to help me become a better trader. Every single one of my tools, all my EMAs, my fibs, even my fib, some of these fib levels, they are not from the Fibonacci. They are levels that were introduced to me by other very knowledgeable trader. 706 was introduced to me by Chingus X, one of the smartest TA guys I have ever met. And I've been using this level for years, and it's helped me. So it's one of those things that whatever you can find that's going to help you have a better understanding of the market, that's what you should use. And if it makes you money, embrace it. Utilize it. Is it going to be 100% every time? Absolutely not. But as long as it's right, more often than not, that's what you want to use. That's what I use anyhow. All right, guys, I hope that you at least were able to understand some of the points and some of the areas that I'm looking at. Again, to reiterate, I do not know where the bottom is, but I do know where the bottom was in previous cycles. And until the market changes, I'm not going to change the way I do my TA. And what I mean by that is a lot of people are saying that this is the bottom. This is it. That means that the whole entire market cycle ended at 618. It has never in the history of Bitcoin ended at 618. Never. There isn't a single analyst that can make a case for 618 since Bitcoin has been around. But can it happen? Yeah, it can. It'll be this time it's different. And this is a phrase that a lot of people get ridiculed. I ridicule a lot of people for that same thing because everybody wants to think that this time it's different. So if the analyst that you're following tells you that this is the bottom here and you follow him, good for you. And it does work then guess what? We now have a data point that we can refer on future bull runs, and we can say, hey, you know what? 5 bull runs out of 6 bull runs, 5 of those ended in 80 to 85%. But guess what? One of those times it ended at 618. That's our new variable. So next bull run, we can say, well, there's a possibility that 618 may be the bottom, and we can start using that. But that's really, really irresponsible to call out 618 as the bottom when there's 0 data points for that. Listen to that. There's not one single data point that you can use as a reference that 618 is the bottom in the history of Bitcoin. So just keep that in mind the next time you listen that this is the bottom. Now, are we going straight down there to either one of these targets? I don't believe so. I think that we're going to have a rally back up and a confirmation, a back test, if you will, like we've had every single move on the market on the way down. Look at 2017. Did 2017 come straight down? Did it come down? We lost 50% in 1 week. Then we went right back up. Then we went all the way back down. We lost another 50%, and then we came back up. Then we came back down, and then we came back up. Look at all this relief rally. We dropped, we had one relief rally. We dropped hard again, another relief rally. We dropped hard again, another relief rally. We dropped even harder, another relief rally, until they got smaller, and then capitulation. Fast forward to 2019. This was the low of 32,000. We went straight up. We hit the top here. We came back down. We had a relief rally. We dropped again. Another relief rally. Another lower high. We dropped again. Went sideways. Dropped pretty hard. This was a 19.54% drop. We made it back up a month later. Then we dropped pretty hard. We started going sideways. Okay, the market's turning around. We're going back into a bull. Capitulation 50%. Actually, 60-something percent. Let me see. You know what? Let me measure it. I think it was 50%. Before I say that, this was the top. This was the bottom. Yeah, 64%. 64% capitulation. And then that was the marker that sent us off to $69,000. Fast forward. Here we are. We had the top. We dropped. A little bit of a relief rally. We dropped. A little bit of a relief rally. We dropped. Another relief rally. We dropped. Another relief rally. We dropped hard. And you think it's just going to go, and make it easier for you? Where's the next relief rally? Where's the consolidation? Where's this? Where's this? It's missing, right? That's why I say it's going to take... We're in for a long haul, guys. Do not think that the market is going to come down here, hit your target, go back up. It does. The markets do not work that way. Look at history. Look at history. Where do you see where we did not consolidate or capitulate in the past? It's right there for you guys to study. So have a realistic expectation that once the bottom is found, if we follow previous market cycles, we're going to range for, it's going to seem an eternity. Then we're going to capitulate 50%. Then we're going to range some more. Everyone's going to call another capitulation. And when they start saying Bitcoin is dead, that's when the OGs start getting very, very excited. Because that's when we know that we're near the end. Hope this video helps you guys. Everyone have a really good day. And please leave some comments below if you find any other data points that you think I should be looking at. I would love to hear them. I don't know everything. I'm just using what has made me money in the past. And if I can find another data point that will help me make money, I appreciate you. It'd be awesome. I'm looking forward to it. Have a good day, everyone.